This conference will now be recorded.
Okay, welcome to this video. Have a pen and paper and write some key. We're going to go over the TDI, the Traders Dynamics Index. This indicator is going to help you with your trade calls, with your signals, what you're looking at. You should use this indicator for your final confirmation to get in. I'm going to go over the easiest setup for you to take. Okay. And this is going to help you see the markets a little bit more clear. It's just going to take some practice, you getting used to it. Okay. So the TDI is the Trader Dynamics Index. Okay. It's going to help you read the market expectations. It's going to give you the price action. Okay. We're going to go through the theory right now, and then we'll hit the charts. It's going to identify price action. What is market doing right now? Okay. It's also going to help you with the trend. What is the trend doing? Is it choppy? Is it going up? Is it a strong buy? Is it a strong sell? Okay. And it's also going to help you. You'll be able to see the changes in momentum. So if you're buying, TDI is going to help you get out of that trade because now it could reverse. The momentum is going to stop and it's probably going to reverse on you if you're buying or selling. Okay. It's going to help you confirm the entry. Use TDI as your last confirmation to enter or exit the trade. So if you enter, it's also going to help you exit the trade. Okay. Just follow along and I'm going to show you some examples in a bit, and then I'm going to show you on the charts. Okay. It's also going to help you scale in. It's a powerful tool. Once you get the hang of it, it's going to help you scale in. When I say scale in, I mean you're going to compound your account. I don't want you entering the market with a lot of risk. There's no need to do all that, because if you catch the wrong trend or that trade goes against you and you went in too heavy on your entry, when I say heavy, that let's just say you went in with $10 a point or $20 a point, and you catch drawdown, meaning the trade goes against you, you're going to be down 10, 15 points. And guess what? If you entered with $10 or $20 a point, you're down $200 or $400 right away. Okay. You don't want to do that. You want to be in there again, you want to be in that trade with a little bit of risk, and then I'm gonna help you when to add to that position so you can make some nice profits with a small move. Okay. By compounding. Okay. It's going to help you build confidence in your trade calls when you see it. Okay. TDI uses, and I'm going to break down what each line means. I'm going to keep it simple, and then we're going to hit the charts. But at least you understand at least have an idea of what's going on with the TDI indicator. Okay. The TDI uses the RSI line, which is the based on all averages of the closed candles determined by your input settings. We already went through the settings on TDI. Okay. Multiple time frames, RSI lines used to view multiple trends on the same indicator. Just follow along. The signal line is going to give us an indication of when to enter and when to exit. That's the important one. The market baseline is going to, when you enter the trade, the market baseline is going to give you a visual of when the price is oversold or overbought. Okay, it's going to let us know when a reversal might happen. So if you're buying, the market baseline is the yellow line on the TDI. It's going to help you see what's going on. That way you can close your trade, secure your profits, because a reversal might be coming. Okay, the volatility bands tell us if there's volume in the market, if there's a lot of big moves in the market or not, or if the market's going sideways. All the bands on TDI are going to be like squished together, squeezed together. Okay. Okay. I'm going to break down each line in here. This is your TDI indicator. You should have this on your charts, or you should have it as a template with your TDI. The green line, for most of us, we switch that green line to black so it can stand out more on the chart, but follow along. The green line, it's your current price. What is current price doing right now? Is it trending up? Is it trending down? The green line is going to help you determine what is current price doing. Like for instance, in this example, what is current price doing here? It's dropping. Okay. The red line, when it crosses over, when the green and the red cross over, that's going to help you for your entry and exit. Okay. I'm going to repeat that again. When the green current price crosses the red, if you're looking to buy, you'll see, let me grab a pen. Look at what's happening on the chart right here. When the current price crosses over, that's your entry when you buy. Okay? When these two cross over, that is pretty much your signal to buy in this example. Look what happens when current price rises, goes above the volatility bands. Look what happens when it cuts back in. If you were buying, this is your signal to exit the trade. And you can, once you really get good at this, you could turn this buy, secure your money, flip it to a sell, because look what happens now. It starts to drop. It crossed over. So pay attention to these two on TDI. That's very key. The yellow line, which is this one here, that's the overall market sentiment. Whereas overall, and for the long haul, what is price doing? Is going to be doing? What does it look like it's doing? Okay. For instance, look right here. Look, this is what I mean by now. Current price is going up. Long term, it's going down. So even though price went up a little bit here, the overall market condition, sentiment to the downside in this example. Now finally, price went up, rejects, and starts to drop as well. Current price along with the overall, with the long, with the overall price. Okay, that's just, everything's going to make sense, but we just have to cover this because this is important. This is a signal right there. They're going to fire to get in, enter, and exit when they cross over. The blue lines is either increasing or decreasing the volume in the market. Notice the blue line here, they're all close together. But when the market starts to pick some volume, when the action's happening, look how the volatility bands expand. They expand. It's a lot of volume now. So a lot of action. And then they come in together again. Less action. It's decreasing. Okay, so let's follow along here. So look at the current price. Okay, this is your green line. This is the price line, your current price, okay? Okay. On TDI, remember, when they hit these levels, the 68, price has been In this example, anything in this area is overbought. Price went up, went up, went up. It's exhausted. The trend has been exhausted. Expect to correct. The 32, it's oversold. Price came down, came down, came down. Sold, sold, sell, 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 sell. It's been exhausted already, oversold. It starts to correct. Okay, all this is here is telling you that when the green line is above the 50, it's positive. It's positive to the upside. When the green line is below it, I missed the slide right here, but okay. So look right here. I just finished explaining to you when current price, it's in these areas up here in these zones above that 68 line, buying is exhausted. It's been overbought. Expect some type of correction now to the downside. Okay. And when current price reaches this 32 level, is exhausted. Now look for buys. When current price is below this mid 50, below the 50, it's negative. Like the trend is to the downside. When it's below the 50, you're looking for sells. When it's above the 50, you're looking for buys. Okay, let me explain it again. Current price, when it's above the 50, you're looking for buys. So if I show up to my chart and I see that it's cutting in, I'm looking for setups to buy. When it's cut, look right here, it went cut up, but then it cut back in. I'm looking for sells. It's negative. I'm looking for sell positions to the downside. Okay, it all makes sense. Like again, it all makes sense because you keep going over this over and over again. It's nothing. It's like nothing's gonna change. Okay, let's move on here. Okay, went too back far. I just want to make sure I covered each slide. Okay, let's look at the red line. It's the trade signal line. Okay, the red is the signal line. It's going to help you identify the entry and exits. Okay, look at in this example. Look how everything lines up. We just finished saying that anything in the zone, the 32 level, we're looking for buys. Okay, 68 level, we're looking for sells. Okay, so look what's happened here. Look how it crosses over. When current price crosses over, that's your signal, that's your confirmation to get in. Then it starts to rise. Look right here. It wanted to cut over, but it didn't. It continued to go up. And then you have it cuts in. That's your exit if you were buying this from down here. So pay attention to the crossovers. The crossovers are deadly. I don't want you, the best trades with TDI are up here and down here. I don't want this because at this point, the trade could go either way. It could go up or it could go back down. I'd rather you take the highest percentage trade, which is going to be in here or in here for sells, here for buys. In here, it's like a 50-50. It could go either way. It can go up, down, back up. But when it's up here, it should correct. Okay, the best trades again are up here at that 68, and for buys down here, 32. In the middle of the run, the trade could go either way. Okay. Now we'll look at the market baseline. The market baseline is going to help you identify the overall market condition. Okay. Just look at this example, what I'm like right here. Look at current price. Current price is going up. But look at my market baseline. My market baseline is right at the 50 of the middle of the 50 downwards. So look what happens. Market goes up, tries to break through, but overall, the yellow market baseline beats it. It's too heavy. As it went, just picture the green is trying to lift, push, or it's trying to push the market baseline, but the market baseline is too freaking heavy. So what happens? It gives out, and finally it just drops because the overall trend is to the downside. Just look at it that way, okay? If I can explain it, and if I can explain this to a kindergartner, I would say that the green line is trying to push this heavy, it's trying to lift heavy weight, but it can't. It only could barely tries to push it. It's trying to lift this heavy weight, move this heavy weight, but it won't move it. And the market baseline ultimately wins out. And then the market current price drops. When everything lines up together, that's when everything's the momentum, everything starts going in the right direction. But right here, I don't know if I could explain it any better than that. The green line is very skinny and is trying to lift some heavy, is trying to move some heavy weight against that market baseline. Okay, the market baseline beats it all the time. Okay, let's continue. Just like it's just finished telling you right here. This is your current price. Current price is trying to move the market baseline. Understand now? Current price is trying to move the overall market sentiment. What you think's going to happen? It's going to roll them over, just like I just showed you on that example right there right now. Okay. Also, look at the market baseline here. It's going to help you identify market reversals. Okay. The best trades, you guys, the best trades is when the market baseline on the 4-hour, and I'll show you right now, on the 4-hour time frame, when the market baseline is at that 68 level, expect the correction, a fresh new trend. Put it this way, this is like a fresh trend to the downside. You're catching it at the early stages of the sell. Okay. Market again up here, you're going to catch that reversal. Put it this way, this is the M pattern, a fresh M pattern. Peak formation high, the highest point on the chart. That's the M pattern. Look at it that way. And look what happens when it drops, pulls back up, drops. Remember, this is a 3 to 5 day cycle down, and then it reverses. So put it this way, it went up for because we're on the 4-hour. It just pretend that it went up for 3 to 5 days, is overbought, and the new cycle starts from here all the way down and reverses a little bit, and it continues to go all the way back down. And guess what? A fresh new W, fresh new trend to the upside. 1 day, 2 days of rise, 3 days of rise, and possibly 4 or 5 days of rise. The cycle starts all over again with the M and catch a fresh trend to the downside. So side note, the best trades is when the market baseline is up here in these zones on the 4-hour time frame. Okay, I'll show you some examples right now. Just follow along. We're almost done here. We'll hit, and then we'll go through we'll hit the charts. Okay, like again, just pretend that's the M pattern, fresh new cycle to the downside based on our strategy. That's another M pattern, fresh peak to the downside. And then you get the W. And then you get the reversal with the M back down again, only in these zones. That's important. Let the trades get into these zones before you look for a clean setup to take. Okay, again, it's going to help you forecast the market baseline. It's going to help you forecast market reversals on the 4-hour time frame. Okay. Lastly, identify the increasing and decreasing volatility, the volatility bands, the blue bands right here. Okay. Notice that, look at how the volatility bands are tight together right here. And then when market starts to go, like in this example, to the upside, look how the volatility band starts to expand. It starts to open up. They start to open up. And then guess what? Then they come back down here and then they start to meet again. Market's consolidating. Picture this way: consolidation, stop hunt low, shark fin low, rise. That's the way I see it. Okay. Also, the volatility bands act as support and resistance based on the close. Like look what is happening. It bounces, like bounces, 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 bounces. It's just bouncing off the volatility bands. That's why you can use them as support and resistance. Okay. Like I said, in the proper context, they can identify the stop hunts, the false move against the real market's intentions. Okay. And it's going to help you scale in and scale out. Okay. So look, real quick, when we're looking to sell, the market, take a picture of this or a screenshot. When we're looking to sell, this is your confirmation here. Market baseline is on top. It's the first one. Okay. Look at the signal line. The red is right underneath the market baseline, right here. And the current price, the RSI line, is the last one. Look at the angle. When they're angling to the downside, again, we're selling. Okay. And it's completely, when we're going long, when we're buying the market, it's pretty much this in reverse. The market baseline's at the bottom. The signal line is in the middle again. And the RSI line, our current price, is on top. It's the first one. Okay. That's pretty self-explanatory. That's why it's important to focus right now that you're starting off. Focus on one or two pairs. You want to stock that pair. You want to follow that pair. That way you're not lost. You're following it, and you're gonna, you're gonna know what day in the cycle you're on a down cycle or up cycle. Okay. Look at this. This is one of the setups right here. Okay. We call this shark fin short, sell. When we're looking to sell, this is what I'm looking for. Consolidation, stop hunt is the false move against the real intentions. Close below the catch-up is a sell. Look what happens right here. There's your shark fin. The shark fin is the stop hunt. I'm not taking the buy, I'm taking the sell, which is the better trade. So just just make a note of that. The shark fin is the stop hunt. And notice how it goes. We call it a shark fin because it looks like a freaking shark fin above the volatility band that's blue. It looks like a little shark fin up there. Okay, there's the arrow pointing to the shark fin. There's the arrow pointing to the stop hunt at the high of the day. The bands are tight. RSI line breaks out and comes right back in. Breaks out and comes back in. Okay, the fin, the shark fin comes right back in. And guess what? What do we say about the cross? Right here. If you take that trade as a sell here, that's right here. You're selling near the very high of the day, which is perfect. You're gonna catch some good moves if you just be patient because you're getting in really near the high of the day as opposed to selling when it's in the middle. Okay. Shark fin long is the opposite of the short. Look at here. Consolidation. I'm gonna keep repeating this because this is what you're gonna hear all the time. Identify the consolidation. Where did price break out to? To the downside. False move. Stop hunt low. Consolidation. Stop hunt low. Shark fin. Cuts back in. Crosses the signal line. That's your entry. That's your entry. Where's my exit? When it cuts back in, right there. So you would have been all this in profit. Okay. So again, this is the same criteria as a short. It's just the opposite of it. Okay. Scaling in with TDI. This is the one where I was telling you, you should scale in with TDI. Never go heavy on the entry. There's no need to. Okay. It's going to offer you very key points to scale in with. Okay. On those crossovers. After entry is made, add to your trade on a market-based cross. Add again to your trade on a volatility band break. I'm going to show you an example right now. Exit all trades when it returns back into the volatility band. Like the shark fin, the opposite of the other shark fin. When it cuts back in, you get out. So in this example, again, accumulation, stop hunt, the false move against their real intentions. Okay, look at everything. I want you to start picking my brain and start talking when you show up to these charts. Accumulation, price breaks to the upside, which is the false move against their real intentions. I'm not trying to buy this. I'm trying to sell this because I have a setup. Okay, so this is how you're going to scale in. And we're going to add it up right now. Get your calculators ready because your goal is to grab 50 points out of the market. Okay, so in this example, we're going for 50 points. Watch what happens when you compound 50 points with 3 positions. Okay. Have your calculators ready because I want you to do this. Okay, let's go. You add to the, remember we said when the volatility band, when it cuts back in, you add to your position. So you were to take this trade right here, right there. You entered the market. Let me switch colors here so it could stand out. Follow along here because this is important. This is going to help you manage your trade with very little risk. Okay, this trade right here, we're going to add your first position. You entered the sell right here. You're going to put, let's just say $2 to make the math simple. $2. The goal is 50 points. Okay, 50 pips. How much is that? $100. That's what you'll make on that trade with $2. If it goes to, and right here is your take profit of 50. Okay, check this out. The next trade, when it crosses the when it crosses the signal line, you add another $2. You add another $2 to that same trade. But now that trade is you're giving up some points. The goal is still 50 right here, but because it already separated a little bit, you might get 40 points out of it, 10 points, and then it crossed. You know, it went from here 10 points in, and then it crossed. So you made another. Let's just make 40 points on that trade. What's 2 times 4? You made $80 on that second position, because now profits are making profits on top of profits. Okay, follow along. The next position, boom, when current price crosses the market baseline, you added another $2 to the trade. Now this time it's getting close to where our goal, our take profits at. This time it went for 30 points. Because from here to here, the distance, it'll be 30 points. But from here to here, it's 50. How much is that? $60. Okay. And then it cuts right there, cuts back in. That's your exit. You'd have 3 positions. 1, 2, 3 positions. Look at the pips. The first trade went for 50. The second trade went for 40. The third trade went for 30 points. Combined, you made what? That's 90. 110 pips combined, multiplied. But how much money did you make? 100 plus 80 plus 60. You made on this trade, entering with $2, $240. Okay. If the trade had gone against you with $2 here, let's just say that it went down, then it went back up. You put a 10 pip stop loss, or 15 pips. Let's just, to make the math simple, you put a 10 pip stop loss because you enter so near, right at the very high. You lose $20 at $2. But if you enter with $10 a point and it went against you, you lost $100 at 10-point stop loss. You see what I'm saying? Like, there's no need to go in heavy on the entry, especially right now that you're learning. Don't put $20 because you have, let's just say you did put some $2,000-3,000 in your account to trade. Yeah, if you nail that trade, yeah, you made more money, but there's no need to get lucky. It's just like, don't put $20 and the trade goes against you for 10, 20 points. You're down 200, 400 right away. Compound with a smaller entry and then add to your position as you're going. Okay. So that little 50-point move times 3, 50, 40, 30. You made over 120, 110 pips on that one single move. All right, let's look at some charts. All I'm looking at is TDI trades. Look what happened last. This is pound dollar. This is this current week. So let's look at it. Switch over to the 15-minute chart. Okay, right now, what's the first thing you guys see? Accumulation. Let's see which way they break out to the false move tonight. Which if they break high, we're going low. They break low, we're going long. Okay, but I want to put this together in perspective. Look what happened. Let's see where was these last 2 days. Today is Wednesday. Let's the last 2 days. There was really nothing. There's just shark fin to the low. Hold on. Show you some examples here. I have my screen squeezed together. That's why. Look at this move right here. Okay, accumulation. Let me grab my pen here. Look at this. Always identify the accumulation. Accumulation. Before this move happened, where did price break to? To the downside. What is TDI doing? To the downside. Shark fin. It cut back in. Right here's your entry. Right here would have been your first entry. Second entry, market baseline, right there. This would have been your exit. Here when it cut back in. So let's see, let me erase this. Stop loss goes below the low of the day. How many points was this trade for? If you took this trade on this cross right here, it lines up right here. You would have took the buy position. 2 hours into the market, this trade paid out 50 points. That's what I'm talking about. Okay, now look at what happened here. If you took this buy position, this pullback would scare you out of the trade. Like, oh my God, it's coming back down. But the technicals, it never crossed the market baseline. Like it didn't cut back in. It cut here, but it didn't cut the market baseline. That's more solid when it crosses the market baseline, and it rejected and it went back up. But anyhow, even if you've taken this trade to here for 45 minutes, 1, 2, 3, an hour, if you took the trade on the first cross right here, you're up about 35 points in an hour. Let's look at the previous day on Monday. Excuse me, Tuesday. I have the dates wrong up here because today is Wednesday night going into Thursday. It's Thursday morning, basically in London. This is a little bit more advanced. Don't want you taking that. I want you to take the easy, clear setups. I want them to hit the stops. I want to hit the stops. I want them to hit the stops. They didn't hit the stops. They're not hitting the stops. I'm seeing the shark fin. This happened on last Wednesday. But let's look at this. Identify the accumulation level. I know it went up right here. Where's the accumulation? Right here, right before London opens. Accumulation. It broke to the upside a little bit. I want this to go in here, but it didn't do it. This would have been like that. If they hit the stops, you get the shark fin. No stop hunt, no shark fin. But look what happened. Look at that killer crossover. It crossed over, closed below the catch-up. Once it closes, look how the trade remains below the catch-up. Same thing in here. The current price is my black line. Once it crossed over, look at this. It never bothered to cross over till right here. That's your exit. Would have been here somewhere. But anyhow, you're brand new. What I want you to take is the clear stuff. That's where you have a demo account. I need you to practice on the demo, these shark fins. Perfect, right here. Take a picture of this or take a screenshot. This is what I like to see. When you're looking to buy, this is what I want to see. When you're looking to buy, going this way, that's what I like to see. You're going to see this over and over again. We just don't know what day is coming. Monday, Tuesday, Wednesday. It's got to be ready for it. Always identify the accumulation. Where is it at? It went up. Where's the accumulation? Accumulation. Where's the false move? Where did price break out to? To the downside. Okay. They won't break the 200 Mayo. What is price doing? What is TDI doing? Shark fin, cut inside. Oh my God, that's a signal. Crossed the water, broke back in, crossed the red line as well. There it goes. First position, second position, exit. Look at that W. Okay. How many more confirmations? You always want about 3 confirmations, okay? 3 confirmations. I'm gonna do another example. This is what I like to see when you look at to buy. Rejects off the Mayo, shark fin low. Current price, shark fin low. Current price is at 32. Cuts in, take that. Second leg, right in here. Let's look at another one. Want to see something more. I want to see another clean setup. Again, we're just looking for clean setups. The advance or the WMs or Ws, shark fins. You know, these moves will come, but after you pick up the easy stuff first. But again, pay attention to the crossover. The killer crossover is deadly. Accumulation. I wanted the false move like this. I didn't get it, but there it is right there. Once it crossed over, it pulls down, crossed back up. You could have waited till it closed below the catch up here, which is here, and it's there. It is on its way. 45 minutes of profit to the Mayo. Like those are small moves. There wasn't that much movement last week on that particular pair, but this little move here for 45 minutes was still good for about 30 points. Okay. So again, as an exercise, look for shark fins, look for the stop hunt. Perfect. Another example right here when you're looking to sell. Okay. What do you need to do? Identify the accumulation. Accumulation. What does price break out to? To the upside. False move. What is TDI doing? Shark fin. Stop hunt high. Where are we going to get in? When it cuts in. You took that trade here to the right here to the right here to the is it the 50? Still, you're still making profit here. If you took the look how my crossbar, my crosshair line here lines up with the first entry right here, which would have been right here. 1, 2, 3, 4, an hour. You're nothing. You're just in straight profit for that whole 45-minute run to an hour run. Stop loss goes above the high of the day. Never got taken out till New York opened. But again, that was a trade. It's a small little trade there. Okay, look at this big move. I did not quite got the shark fin, but I got the stop on low. An ugly W to the upside. Look. What is TDI? The crossover. The current price crosses over. Again, as an exercise on your downtime, you should spend about 30 minutes to an hour just looking for shark fin, stop hunt, shark fin. Line it up. Line up the shark fin with the stop hunt high drop, stop hunt low rise. Okay. Let's see. Perfect example as another buy. I mean, they're there. You just have to see them in real time. Obviously is a little easier when the move happened already, but I'm telling you what to look out for. Where's the accumulation at? It dropped. Accumulation the last quarter of the Asian session. Accumulation. False move to the downside. Stop hunt. Low rise. What is TDI doing? The W pattern. Where's my shark fin? Right here where it crosses over at the right time. Wait for the crossover. Second leg W. There's your entry. There's your scale in. There's another scale in. Exit all trades there. Okay, so let me go ahead and stop this recording here.